Today is 28th of July 2015, Tuesday. The important news that came out today are the GDP for pound and consumer confidence for US dollar. The GDP for pound came out nice, 0.7%, same as forecast, and it led to an appreciation of pound across its counterparts. Not much, but there was some appreciation. And with the consumer confidence, it seems to have come out as a surprise, negative news at 90.9 while it was expecting at 100. So dollar dropped today against its counterparts today, for example. Euro dollar, I think for euro dollar didn't seem to have moved much today, but pound dollar went up, so this is because of pound appreciation and dollar depreciation. Dollar yen didn't seem to have moved much as well. It's mostly seen in dollar Canadian, so dollar depreciated against the Canadian. Aussie dollar appreciated, so which means Aussie strength and US dollar weakness. And same thing with Kiwi dollar. Kiwi dollar has just crossed above its 20 EMA. Pound yen appreciated today, and the pound Canadian it is stagnating around the same area, because even though pound appreciated, dollar Canadian fell down, so which means Canadian would have gained its value, so hence not much movement in pound Canadian. And I think in same thing in pound Aussie too, not much movement. There was nothing much of worthy to note around the indices or commodity charts in general, but there has been some interesting news today, so let's take a look at them. The first one was the UK GDP that was at 0.7%, so it's supposed to be good for the UK economy. And for the US consumer confidence drops by most since August 2011. This is the 90.9 that came out today, as you can see. This was bad for for US dollar. So this is one of those news which may impede in the Fed raising rates. With the Chinese stock market volatility and crisis, today it seems like most of the US stock exchanges did well, were on the rise, so it's saying global stock struck off China volatility. But interestingly, I took a look at the chart, and as we discussed yesterday, the Shanghai Composite, it's amazing if you look at the technicals. The lowest on July 8 to July 3 is near the 200 EMA, and it went up to around 50 EMA, and then it dropped down yesterday by 8 point something percent. So I think for people who has been watching this chart, I think they would have lightened up their positions when the price or it began to cross below this mark. So this made me think of that story of how Paul Tudor Jones was able to say correctly the drop on the 1987 Dow Jones. So I took a look at it, and it looks like So on the 19th of October 1987, when it dropped more than 500 points, it looks like for people in the know, this was very clear. I mean, there was a uptrend line that has been broken down. In fact, this guy who put up this this blog. He said that the long green trend line shown on the chart was a warning unheeded by many, including me. Price broke through the trend line at B about a week before Black Monday. So people who has been watching this chart, I think they wouldn't have lost money. It looks like in any of these financial crises, it's the common people who don't know much about the inner workings of the market who seem to suffer the most. In fact, most of the pictures of the Chinese stock prices currently, they seem to show people on the street or common men. For example, if you look at this picture, he looks like a retail investor who is investing in the stock market, maybe without much knowledge. So, but I think the people, the banks and the financial institutions who are investing professionals, maybe some are wrong, but there must be many of them who are wrong, but they have the cushion to absorb this shock and they may be fine. There was a news today about a Chinese farmer who invested all his money in the stock, and the story goes he had around $164 in savings and he invested all of it in one company. So there was no diversification, and when the stock collapsed, he lost all his money. And to make matters worse, he bought more stocks on margin because of encouragement from the broker and the Chinese government. It looks like he took on a margin of around $1 million. So in the end, he has lost all his money, and now he owes to the broker to the tune of his original savings of around $164,000. It's a shame. So this is a risky game to play. And so, for example, the same thing with this one. The professional investors, when they saw the price breaking below the 50 EMA, they would have been cautious. They would have lightened up their positions or done some hedging or whatever. Anyways, moving on, there were some other news of how BP profits fall on low oil price, and the oil price is going to stay for a while. Another one interesting news of how Bank of Russia, it looks like they want to cut the interest rate, but because of the plunge in oil price, the ruble is plunging as well. So they are in a dilemma, it seems. She is the Bank of Russia Governor Elvira Nabiullina. Another news of Australian dollars 20% drop isn't over yet, so Aussie may still be falling down against US dollar, and it may, so on the other side, Euro Aussie and Pound Aussie may appreciate. There's this news of how pound jumps most in 2 weeks as faster GDP pace feeds rate wages, but as we saw today, there was some appreciation, but not so much. And there was another news of why I brought up this news is Fed, when they raise this interest rate, say in September, they will be looking at all these numbers because they are harping on how much data dependent it would be when they raise the rate. So things like this is against raising interest rates. So home ownership falling in US. But on the other hand, so there are two camps who think Fed would raise rates in September or in December, and there is the other camp who believe that Fed will not raise this year and will start raising from next year. But what's interesting is to note their arguments. For example, this one saying that Fed would raise interest rates, and one of the arguments put up by one of the people who thinks there will be rate raise this year or in September is the mandate of the Fed is inflation target of approximately around 2% and full employment, which seems to be around 5% to 5.5%. So unemployment rate in US is now around 5.23%, so which is all right, and inflation is not, it seems to be raising, so there's expectation of inflation to raise in the near future. So the chance of Fed is all right to raise rates, so that's their argument. So thinking from yesterday, when the other came who said Fed will not raise rate this year and next year, I just can't remember any of their arguments. Well, they may say the crisis in Greece or China, for example. And now that we bring up China, it seems like one of the guys was saying how the Chinese bursting of this stock bubble, the Shanghai Stock Exchange, is all right because it's just the fraud that's being blown away. The economy is fine, the fundamentals are fine, so underneath the water should be calm and stable. So it's just the turbulence in the upper surface which is more like the fraud and not the real water. So maybe those are their arguments, but considering that the Greece crisis is kind of getting less and China may not be that bad, so Fed could raise interest rates. And I think that's all that's important from today, and we'll come back. Oh, just one thing to note is, so tomorrow they're gonna announce the federal funds rate, so if they want to, they can raise this rate tomorrow even, but Janet Yellen has been very keen to guide the market, saying that it will be gradual, it will be in the future, so I don't think they will do anything to roll the market. So if they change the rate tomorrow, there will be chaos in the market, so which I don't think they will do. And the other thing was this guy from Credit Suisse, I think his name was Bob Parker. He said on CNBC that when the Fed raised rate in September, it will be 0.75%. Alright, let's wind up for today here.